My dear friends and investors, welcome again to our monthly video on markets and investing. Today I'm going to talk about something which is a very exciting topic, which is the whole digital ecosystem that we as Indians have built over the last several years. Something that is a pride of India, something that each one of us should be very proud as Indians of what we have achieved at the frontiers of technology. As you all know, by now you are very familiar with things like Aadhaar, UPI, and the various technologies that India has developed, which are very unique to our country. And we have been showcasing these technologies to the world, whether it was the G20 or any international forum. We have the world sitting and taking notice. But beyond being proud Indians, we will also talk about how this advancement in digital technology and the infrastructure that we have built as a country is changing the landscape of business, and therefore as a corollary is also throwing open several interesting investment opportunities. And therefore we will over the next few minutes discuss about how the digital landscape is changing the business environment and the opportunity set in India. Let's first start with the basics. Many of you would have heard about this thing called the JAM Trinity. Now, what does JAM stand for? Jan Dhan, Aadhaar, and mobile. It all started with, in 2014, the Prime Minister started a massive program of opening Jan Dhan bank accounts. As you know, 70% plus of Indians didn't even have access to a simple bank account. And there was a massive drive to open these Jan Dhan bank accounts. And how did we do it? We first rolled out a biometric identification system called Aadhaar. I'm sure all of you have an Aadhaar card. An Aadhaar card is nothing but your digital identity, right? And each individual has a unique digital identity. With that identity, we were able to open bank accounts for millions of Indians. And then we connected those bank accounts with the mobile phone. And that created the JAM Trinity. This enabled us to build a population scale digital infrastructure which enabled movement of money very easily. The idea of setting up this digital infrastructure was that the government could transfer money or subsidies to the most needy people without any loss of money in the supply chain. As you all know, initially there were several government programs to benefit the poorest people, whether it was subsidized fertilizer, whether it was subsidized cooking gas, whether it was food grains, and that involved a huge amount of physical infrastructure. It involved a huge amount of government machinery. And what happened as a result was that a lot of the intended benefits never fully went to the people who deserved it. There were a lot of leakages in the system in between, because always whenever there are layers in between, there is always leakage, there is malpractice, there is corruption, and for every rupee that was spent, only 15 to 20% actually went for the benefit of the people for whom it was intended for. With this whole Jandhan, Aadhaar, mobile Trinity infrastructure that was set up, the whole idea was that how do you transfer this money directly into the bank accounts of the people with the least amount of friction and the least amount of leakages in the system. What finally resulted, what was supposed to be a layer of infrastructure to improve productivity of subsidies, then became the basis for a lot of internet based businesses in India. But before that, it was very important that we built this infrastructure. So, for example, in 2015-16, there were only 145 million accounts. Today, there are almost 529 million accounts. Almost 500 million Jandhan accounts have been opened. In 2015, there was hardly 10,000 crores in all in those accounts. Today, there is a staggering 2.3 lakh crores which has been deposited in these 500 plus million accounts. And today, the average amount in each account is almost 4,300 rupees. What started at 1,000 rupees is now almost 4,300 rupees. As far as the Aadhaar cards are concerned, in 2010-11, there were hardly 0.42 million cards that were given out. And today, we have almost covered 98.8% of the population which has access to Aadhaar cards or has a digital identity. The other big enabler was really the mobile revolution in India, right? We have one of the lowest data rates for mobile phones in the world. India's mobile tariffs are just $1.8 or roughly about approximately 150 rupees per person per month, as compared to Indonesia, which is at $3, Thailand, which is at $6, Malaysia, which is at $10, Singapore is $30, US is $35, and Canada is almost $44. You can imagine the difference between $2 and $35 or $40. That is a level of competitiveness that we were able to achieve because of the very low tariffs that we had on mobile phones, which means that a very large portion of our population could afford a mobile phone with internet connectivity. And this has been a huge enabler which has enabled us to really get our digital public infrastructure growing. Today, almost 954 million Indians have access to the internet, largely through mobile phones. And of that, now almost 883 million people have access to some sort of a smartphone. And this really is the backbone of the massive digital infrastructure that India has built. You have mobile phones, you have cheap internet connectivity, you have a digital identity, and you have a bank account which is now linked to your mobile phone. And therefore, this resulted in a mode of transacting which was unheard of in the world, which is popularly called as UPI. Just moving money has become completely seamless, and India is probably the only country which has achieved this at full population scale, at very low cost, and with virtually no cost to the individual user. And today we have seen a staggering volume of transactions that happen on UPI. From virtually nothing in 2017, today the volume of transaction is 131 billion transactions with a total amount of 200 lakh crores. And that is the scale at which money is moving on this digital highway. I call this a digital highway. So in the good old days when the government built a road, right, there was improvement in connectivity. People could move, goods could move, and access became very, very easy. Today, what the government has done, what India has achieved, is actually built this digital road. And once you build the road, you can see that how transactions are zipping across people and businesses at a very, very rapid rate. So this was the foundational infrastructure which created this digital revolution. What this has done is that this has created a base for several new businesses which were not possible unless this infrastructure was in place. And this has given a great opportunity for many Indian entrepreneurs to build very disruptive businesses which solve problems which are real, which reduce the friction and create multi-billion dollar businesses. And we will take a few examples where we believe that this is opening up very interesting investment opportunities for people like you and me. And this is an era, what I call, is the beginning of the rise of the digital giants in India. So let's look at a few examples. All of you are familiar with Zomato, and it's very topical now because one of Zomato's competitor, Swiggy, is also going public. And if you look at Zomato, which essentially started as a food delivery app or a company and later on moved to quick commerce, which is essentially delivering daily essential items to you within a matter of 10 minutes. It's unheard of. And this is a massive revolution. Now, what are the implications of something like this? As you all know, India is a large domestic consumption market. With obviously 1.4 billion people, we always believed that one of the big areas of growth is consumption. You know, FMCG products, daily staple products, groceries, and so on and so forth. This revolution got a huge wind when organized retailing came place, where you could go to a big shopping mall or a big box retailer and under one roof you could get hundreds and hundreds of daily use consumption items in one place. But now Zomato did something very similar, right? They took a large fragmented restaurant industry or the food industry and brought all of them on a single platform. And that was revolutionary. You didn't have to physically go to the restaurant anymore to enjoy different cuisines and food. You could look at it on the app and order it, and it would more often than not get delivered to you within half an hour. And that was quite revolutionary, both for the consumer, but more importantly, even for the restaurant. And therefore, we believe that this has created a phenomenal business which is growing and compounding at a very, very fast pace. As opposed to the traditional FMCG companies which have created massive wealth for investors over the last so many years, we now have some of these B2C digital consumer businesses which are actually aggregating demand at a platform level and growing much faster than what each of the individual components or businesses are growing. If you look at the last 4 years, essentially post-COVID, right, and you look at the revenue CAGR of many consumer businesses, here is what it looks like. So from 2020 to 2024, we took a range of consumer businesses and we looked at their 4-year revenue CAGRs. And here is what it looks like. The average revenue CAGR of various kinds of consumer businesses over the last 4 years was about 15%. Not bad, mid-teens growth. So for example, there were a few which grew faster than the average, like Varun Beverages compounded at 25%. You had Patanjali which compounded at 25%. You had Avenue Supermart which has compounded at 20%, which is one of the leading retailers, and so on and so forth. Several great brands, several great consumer businesses, but on an average, they were compounding somewhere in the early teens, 15 odd percent, some of the really standout ones at 20-25%. But a company like Zomato, which was able to aggregate a lot of the consumer businesses or services, which includes the food delivery business and the quick commerce business, has compounded at an astounding 47% per annum over the last 4 years. Similarly, if you take another industry where digital technology has completely disrupted the industry, that is online broking, right? Traditionally, if you wanted to place a transaction, you would call up your broker and you would place an order and they would execute for you. Slowly, some of the brokers also started having a internet access, so you could log on to your computer and you could place online orders. And as you all know that Zerodha was really the first pure digital brokerage house which completely disrupted with zero brokerage and very easy connectivity. And today, you have Zerodha, you have Grow, you have Upstocks, you have Angel One, and every traditional broker has even tried to go digital. And this entire industry is today very, very disrupted and is moving online at a very fast pace. In fact, in 2014, the share of online digital brokers was just 4%. 10 years out, that share has gone up to almost a staggering 64%. And I believe that as we go along, this share will only increase dramatically from here. And this is how a very traditional brick and mortar business has moved completely online. And the people who have disrupted this industry have got the lion's share of the market cap. Similarly, in financial services, if you look at the insurance business, as you all know that insurance is a big long-term attractive business. Many of us investors have invested in high-quality insurance companies. And again, if we use a similar recent time frame of, let's say, the last 5 years from 2019 to 2024, and we look at how many of the leading insurance companies have grown, the picture is very, very interesting. You have, for example, a company like PB Fintech, which is an online digital broker and facilitator, which has compounded revenues at 26% per annum over the last 5 years, compared to several other high quality insurance companies. For example, SBI Life has compounded at 23, Kotak at 17%, HDFC Life has compounded at 15%, Birla at 16%, and the average CAGR growth for the insurance industry over the last 5 years has been 13%. But a platform like PB Fintech has actually compounded at twice the rate, at 26%. And therefore, we are now seeing the benefits of how an online aggregating platform is able to grow multiples of what the underlying industry is growing. A similar revolution is something that we've seen in an industry which is far more mature and has gone digital far ahead of many other industries, and that is the travel and the leisure industry, right? Today, whether you want to book a hotel or an airline ticket, more often than not, most people would do it online at one of the online travel booking sites. And again, if you look at what has happened in the last 3 years, especially post-COVID, the average growth of travel companies has been a staggering 63%. For example, Lemon Tree Hotels revenue has compounded at 62%, Indian Hotels at 63%, Chalet at 70%. However, Make My Trip, which is an aggregator, has compounded at 75%. So you can see that for us today as investors, we do have a very credible alternative. We could either invest in each of these underlying businesses, whether they are a consumer business, whether it's a financial services business, whether it's a travel business, and several businesses which have taken to the internet, or we could really identify very disruptive and fast growing internet companies which are growing multiples of what the underlying business is growing. And we believe that many of these businesses, what we so call the new age businesses, now offer a very credible investment opportunity. Obviously, there was a lot of euphoria in 2021 after COVID, when everything went digital. There was a huge amount of euphoria. Many of these companies went IPO. The IPOs were probably mispriced. Also, that was an era where these companies were growing fast, but they were also burning a lot of money to acquire customers. They were all over the place. They were trying to do too many things. However, in the last 3-4 years, many of these companies have sharpened their business focus. They have shed unprofitable businesses. They have focused on generating profitable revenues. They are reducing their costs. And today they have built the scale where they are able to monetize the customers who have come onto the platform and build a very credible, profitable, cash flow generating business. Now, I am not saying that therefore one should just go and blindly invest in all the internet businesses, but the fact remains that many of these businesses over the next few years will create tremendous value simply because they are aggregating a lot of fragmented demand on a single platform and are compounding at a rate which is much faster. If we look at what happened in China, we looked at the total market cap of internet companies in China and how that evolution has happened. In 2010, the total market cap of all Chinese internet companies was hardly 1% of the total market cap. By 2020, that is 10 years out, that number had swelled to 30%. Yes, almost 30% of the Chinese stock market cap was dominated by internet businesses. Even today, after a severe crackdown on internet businesses in China and a deep correction in 2022, even today, as we speak in 24, the mix or the share of internet businesses in the total market cap of China stands at 20%. In India, we are exactly where China was in its early days of internet penetration. In 2021, when some of these companies got listed, their share of the total NSE 500 market cap was 2.2%, which bottomed in 2022 at 1.2% because as US interest rates or global interest rates went up, there was a deep correction in the tech names. Also, some of these stocks were overpriced and many of these business models were not yet mature. As I said, many of them were businesses which were losing money. However, now we believe that many of these businesses have focused on what they do best. They've cut down on unprofitable businesses. They are focusing on costs and monetizing the revenue potential of the customers that they've been able to onboard onto their platforms. And today in 2024, the total share of these businesses is just under 2% of the total market cap. So these are very nascent days, and this share we believe will go up over the next 10-15 years in a much more dramatic fashion. This will happen in two ways. One, as I explained, that if these businesses continue to compound their revenue and profits at much faster than what the average business or the underlying businesses are doing, they will obviously take away market share and market cap share in the total market cap. And secondly, we will also see significantly new listings that will happen from the so-called new age or internet businesses. And that, my dear friends, will be a big hunting ground where we will find the next generation of disruptive, fast-growing companies which can create tremendous wealth. As you all know, you would have seen in our portfolios, we have already started to invest in some of these businesses as we become more comfortable about their profitability and the focus and their capital allocation policies. And increasingly as we go along, we will increase the share of internet businesses in our investment portfolios. In summary, we believe that we are seeing the dawn of the digital giants in India. And what is it that we are really playing and what is it that these businesses bring to the table? A, they bring faster access to the consumer. Almost everybody has a mobile phone, everybody has an internet connection, and therefore the ease of access and the speed with which you can access a customer is tremendous. B, they have the ability to consolidate several fragmented demand onto a single platform. Third, there is convenience, there is better transparency and ease of transacting. You buy a goods or service and you pay digitally. Fourth, very interestingly, an online platform is far better suited to target and capture what we call as impulse buying behavior. And lastly, as I mentioned, today many of these companies have become very smart. They know how they are able to monetize this either through platform fees, transaction fees, advertising revenue, and even in some cases non-linear pricing like what they call surge pricing. And therefore, we believe that many of these internet businesses will become very interesting investment opportunities as they grow significantly faster than traditional businesses, are able to capture a larger part of the consumer's wallet share and compound and create wealth at a much faster pace. We will get an opportunity to discuss some of these businesses in detail in the future, but for now, this I believe was a good overview, and I hope I was able to communicate how this digital infrastructure and revolution is creating very unique investment opportunities, something that we've seen in other markets where these businesses have grown at a much faster pace, are very dominant parts of the overall market capitalization, and we are in the very early and interesting stages in India. We will take advantage of some of these opportunities, and therefore until next time, thank you.